Good morning, everybody. This is the Live Market Open for Wednesday, April 26th. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. We have quite a busy show for you today. As usual, we'll cover recent developments in markets, talk about the various charts and levels. We have a very nice uptrend channel in Euro-Dollar, discuss the upcoming events. It's a busy week. Focus on two specific events, the ECB, the European Central Bank that meets tomorrow, and the GDP release on Friday. Our currency of the week is dollar-yen, also a mover in the shadows of euro-dollar this week, and we'll discuss the week ahead, the first week of May. And before we go, we'll wrap up, of course. And as always, the most important part, your questions. You're welcome to ask them on the chat here. If you cannot see the chat box alongside the screen, please go to tlk.io/fxstreet-forex-live-video. Okay, what's going on in markets? Well, I'm sure you've heard the news, if not traded them. Emmanuel Macron, the centrist, topped the French polls, voting 80% of voters went to the polls, very high turnout, and Macron came out on top with nearly 24%. Second place is extremist Marine Le Pen. They will face each other in the runoff on May 7th. That's just about 10 days away. Euro-dollar reacted very, very positively. Another boost for the euro came yesterday from the reports regarding the ECB. Also related, of course, to the French elections. The ECB is expected to be optimistic, and this also pushed the euro a bit higher. Now, when the mood is better, the one currency that is sold off is the Japanese yen. So also there, we're seeing a big drop in the yen. Dollar-yen is on the move higher. And also euro-yen, pound-yen, it looks good. On the other hand, commodity currencies are not looking that strong. So there seems to be some kind of a trade war between the United States and Canada, a relationship that began very well, now doesn't look so good. Trump talks about slapping a timber tax, a lumber tax, tariff, whatever. Also, there are problems around milk, and the Canadian dollar is suffering. Another thing from the US president, heading into his 100 days, he wants to present some kind of tax reform. There are lots of details. He's holding a press conference today. It's clear that this plan will not pass today, but at least we'll have a bit more details. Border adjustments, repatriation taxes, lots of headlines in the mix. It's supposed to help the US dollar, not seeing that so far. Another thing to watch out is end of month flows. Okay, we're heading towards the end of the month, 2 more days to go in terms of trading, and there are always last minute adjustments, so watch out for that as well. So far this week, we really can't complain about volatility. Okay, let's talk a bit about some data. So, basically steady in many areas. Jobless claims are stable at 244,000. Existing home sales, a small beat, 5.71. New home sales released yesterday, they showed a beat of, quite a big beat, 621,000. But consumer confidence dropped from the sky-high levels. It still looks good, but there is lack of correlation between high consumer confidence and the lack of actual spending. So consumers may be confident, but they're not buying. So what good is this consumer confidence figure for? Anyway, it's quite a mix of US figures. Elsewhere, sorry for that, in the Eurozone here, where I'm sitting in Barcelona, inflation was confirmed at lower levels, 1.5 on the headline, 0.7 on the core. But purchasing managers index is also here. The forward-looking figures, business confidence looks positive. Business confidence also looks positive in Germany, with the IFO figure jumping to 112.9. UK retail sales, here we see a slump once again. 1% Brexit is beginning to bite. Inflation is a bit mixed elsewhere, beating in New Zealand with 1%, missing, it's a very slight miss in Australia. Tonight we're seeing the Aussie fall, and in Canada a small miss. Okay, enough talk about news. Let's see how it looks on the charts. So we'll begin here with euro-dollar. Let's begin with the big picture on euro-dollar. Look at this very nice uptrend channel. Since the beginning of the year, we're seeing higher lows. Okay, we had this 103.40. Since then, we're seeing higher lows, and also we're seeing higher highs there being set in January and in March, and we're seeing the pair bounce off the lows and move higher. And if we focus a bit further, anyway, we're currently at 109.30, resistance there at 109.50, the high level so far after the French elections. Further resistance above the 110 level at 110.40, followed by 111.20, and very high resistance 113, which was seen on the night of the US elections. Looking down, we crisscrossed 109.50, the previous high for 2017, recorded in March. Below, we have the 108.70, which was a high in December, the 108.30, which was the previous high for 2017, and there we have 107.70 and 107.20. All in all, the technical behavior of euro dollar is quite favorable. It looks quite good. Let's continue with pound dollar. Pound dollar also got a boost from the announcement of the UK elections. Just last week, it seems so long ago after the French elections. So here we are at 128.20, resistance there at the swing high that we've seen at 129, further resistance 130, support here at 127.90, which was the initial Brexit high, but it's not that strong anymore, and further support 127, 126.15. So we're seeing a consolidation in pound dollar, holding onto its higher ground, but not moving above 130, not yet. There is a conundrum between, well, optimism about the UK elections, and on the other hand, some signs that the UK economy is slowing down. Dollar again, when everybody, including myself, I must admit, everybody was focused on the French elections and the impact on the euro, we're seeing a big turnaround in dollar yen. Okay, risk off. So we bottomed out here at 108.10, and since then we're on the move to the upside, crossing 110, which was a triple bottom, and nearing another level which was triple bottom, 111.60, currently at 111.44. Very strong rise yesterday. Also, actually on Monday, just had a weekend gap to the upside. Further resistance 112.20, 113, and 114. Support remains at 110 and followed by 109.50. So quite a strong move there on dollar yen. Of course, we'll reach the crosses later on. Dollar CAD, here the Trump timber tariff against Trudeau is weighing on the Canadian dollar, 135.80, resistance 136, 136.30 over there, and further resistance, we're already at levels last seen around 14 months ago, over 1 year. Okay, you can see we have to zoom out in order to see the further levels. So maybe let's add some kind of line here on the chart, but that's already a bit far away at 138. Okay, so basically it's a breakout in dollar CAD. I know many of you are not so interested in the Canadian dollar, but we're seeing it on the move. Volatility is quite high. To the downside, we have 135.40 and 134.60. Aussie dollar is suffering from that mediocre inflation figure. Anyway, currently just around 75, the very round number. Support 74.70, which was a stubborn cushion, followed by 74.50, very close, and then it's 73.75. Aussie dollar is struggling. To the top side, we have 75.40 and 76.10. Very strong line, used to work as support, now as resistance. Kiwi dollar, following its peers, the other commodity currencies. In fact, figures in New Zealand haven't been that bad, but it seems to go with the flow at the moment. Just above 69. Support is at 68.80 and 68.60, very close support there. 69.50 works as resistance, followed by 70.50 and 70.90. And another line to mention is the bottom of the previous high range back in earlier this year at 71.25. Okay, and we'll mention the US dollar against the Swiss franc, 99.40, resistance 99.60, and parity followed by 101. On the bottom, the downside, we see 99 and 98.15. Okay, so this concludes our coverage of major pairs, lines of support and resistance for the last week of April. And now let's move to the crosses for the last week of April, lines of support and resistance. So we'll begin with Euro Swiss that is moving. The Swiss National Bank was ready to intervene in case something that didn't happen, a win for Le Pen or unfavorable outcome in the French elections. So we're back at 109. So this rise of the euro is reflected also here. 108.60, another weakened gap here, not only in euro dollar. Resistance there at 108.70 and 109.10. I would expect things to calm down from here. Anyway, support 108.50 and 107.80. Euro pound. So we had a bit of a catch up here. So we had euro pound dropping on the news of the British elections. And now the euro is catching up. So the pound is making a, euro is making a catch-up move, and we're back above 85, 85.20 at the moment, 85.70, 86.60, 87.80, and 87, and 88.50 over there. Support appears at 84.75, 84, 83.30, and 83. So we're still in this very, very wide range, I would say, between 83 and 88. The move to the downside met support there. If you look only at the technicals, okay. And euro yen, the big winner from the French elections, not Emmanuel Macron, not the French pollsters, which did an excellent job. But look at this huge move on euro yen. It began already before the French elections. We found the bottom there at 114.77, and here we are already closer to 122, so about 700 pips to the upside. But especially most of the move came on the back of the French election, so resistance awaits at 123, 123.30, 123.80, and 124.40. Support 121.30, 120, and 118.15. Okay, quite a huge move there. Also, pound yen enjoys this sell-off of the Japanese yen, so we had another leg up. The UK elections and then the French elections helped this cross, the Gepi, the dragon. We're back at the one above 140, 142.90 at the moment, 144.80, a strong resistance, followed by 146.80 and 148.50. Support at 140.50, 138.60, and further below 135.50. And it's worth mentioning the price of oil, which couldn't hold up to the gains. We're back under $50 per barrel on WTI crude oil. 49.50 is now weaker resistance, strong support, extremely strong support there at 47. Further support 44.50, 42. High resistance 52 and 54.50. So basically, we're at the lower end of the range that we're seeing in the past 4 months or so. Okay, so we always add the WTI crude oil to our list of crosses. This concludes our crosses. Now let's talk about the next events this week. So today, Wednesday, not too much on the agenda, light day, but don't worry, it's getting much more interesting later on. We have Canadian retail sales at 12:30. So this provides another opportunity for movement in the Canadian dollar, but the main story remains Trump's timber. And we have oil inventories, also Canadian related. And let's see if oil falls further. US production is on the rise. Tomorrow is a big day. During the night, we have the rate decision by the Bank of Japan. No changes expected there. I'm sure they're very pleased with the downfall of the yen. I think they'll just keep quiet and let it flow. We have German CPI throughout the day with the final figure released, just around at 12 GMT, just around the ECB press conference. So I'm not sure it'll have so much of an impact. We have Spanish CPI at 7, the big event of tomorrow is the ECB rate decision. Okay, we'll talk about that in detail very soon, but the decision itself, no changes expected at 11:45. Main thing is Draghi's press conference at 12:30. Also worth mentioning, a top-tier figure in the United States, the durable goods orders. It feeds into the GDP, also a topic of a special segment later on. On Friday, we have some GDP figures from Europe. We have French GDP at 5:30. German retail sales should be interesting. Spanish GDP expected to show more growth at 7. A lot of sort of mix. We don't have the German GDP, so we don't have the really important thing. UK GDP at 8:30. That should give us some information about the slowdown in Q1 2017, how Brexit bites, how consumers are buying less non-essentials, more essentials, such as food and energy. Let's see how bad it is. It's expected to drop from 0.6 to 0.4. Okay, so far Brexit didn't bite too much. And the main dish for Friday, well, sorry Canada, but it's the US GDP. The first release out of 3 for Q1, expecting a big slowdown. Also that, we'll talk about that in detail soon. And also Canadian GDP released every month, actually. So it's quite well, high frequency figure in comparison to other countries. Okay, so quite a busy, strong finish to the week. We had a very interesting beginning with the French elections. It went out as planned, according to our number 1 scenario. Macron first, Le Pen second, the rest were behind. Now we have some figures, more of the classic movers to end the week. And now to our ECB preview. So it all depends on this man, Mario Draghi, president of the European Central Bank, and various facial gestures here. So a bit of a background. Back in March, the ECB removed this clause about using all instruments, okay? They vowed beforehand to use all instruments to battle the danger of deflation, the specter of falling prices, the vicious cycle. And Draghi then clarified that they wanted to remove the sense of urgency, okay? And market side as, okay, we'll have less stimulus. QE is going to end at the end of the year. No more euro printing, a stronger euro, okay? But time has passed since then, and Draghi re-clarified. They only removed the more extreme cases that they're fearing about, not the baseline. The baseline remains the Eurozone economies need more help, need accommodative monetary policy, need more stimulus. Not extreme, but still need support. And we had, since then, various speakers taking different directions. So we had some of the more hawkish members talking about raising interest rates before ending QE, and this helped the euro. We had Draghi and others on the dovish side saying we're moving very, very slowly. So this is what matters now. But let's talk about some details about the actual policy of the ECB. So from April, from this month, the ECB is buying only 60 billion euros worth of bonds. That's below 80 billion that it bought until March, okay? This was planned, this was announced back in December. And this program of buying 60 billion worth of bonds and also corporate bonds will run until the end of the year, until December. The big question is what's next? More QE in 2018, maybe tapering it down very gradually, or maybe ending it abruptly altogether next year. And another question is, will they raise the deposit rate at -40 before ending QE? These are open questions for the ECB. If we look at inflation, it backed down. We had it rising exactly to the ECB's target of 2%. On the headline figure, this includes oil prices, of course. They were the main driver of higher inflation. And core inflation also dropped, very disappointing for the ECB, from 1% to 0.7. It stood at 0.8, 0.9 for many months, and this setback, this fall back to 0.7 was a disappointment. Okay, so Draghi's dovishness was vindicated. We're facing now new figures, new inflation figures, which are expected to be stronger, and GDP growth figures, and the ECB has been patting itself on the back, very pleased that it was responsible for growth. Okay, so these figures are of course very critical for the next moves. But politics, the ECB will not admit it, but politics certainly play a role. And there were hopes, well, after the French elections, the first round, now these two people, Emmanuel Macron on the left and Marine Le Pen here on the right, they're running off on on May 7th, and Macron is expected to win. Opinion polls show a victory for Macron, 60% against 40%. Even if he only wins by a small margin, like Brexit, 52 to 48, it's good enough. It's a huge relief. Macron is pro-European, pro-Euro, pro-market, not extreme, okay? And the ECB sees that, and it'll probably react. We had a report yesterday that it's a big sigh of relief for the ECB. Again, they will not admit it because they're supposed to be above politics, but and this could lead them, according to these reports, to prefer a more optimistic view of things. They won't tell us we're going to end QE and that's it. They're going to be data dependent like the Fed. They learn many things from the Fed, but they're going to be a bit more optimistic rather than pessimistic, seeing higher growth leading to lower unemployment, higher inflation, and this will eventually hint to less stimulus and higher euro, instead of seeing the glass half empty, which is inflation is still low, unemployment is still high, and political uncertainty in other countries, in Germany, is still high. So the French elections, these two figures here, you can see now on the screen. Well, the figure on the left more, Emmanuel Macron, he makes a difference. Okay. So what to expect from the ECB? First of all, no change in policy. This is sort of the meetings in March, June, September, and December are accompanied by new forecasts by the ECB staff in Frankfurt. This time, no new forecasts are planned. No change in policy, no change in QE or the negative interest rate. The big question is, was March inflation just a blip? The drop to 1.5 and 0.7. What about growth? All these questions will be asked, and there will be also many political questions about the French elections, but ECB President Mario Draghi will probably dodge these questions, and maybe he'll hint that he's happy, but not, well, it should be quite subtle. What will the euro do? Well, optimism related to France or not, the euro rises, extending its current trend. Okay, the trend is higher, as we've seen there on the chart. Uptrend since the beginning of the year, higher lows, higher highs. So that's sort of the baseline scenario for now. Shouldn't be that big. It should be within the trend, okay, within the channel. If Draghi is relatively cautious, if he sees the glass half empty, again, lower inflation, unemployment still high, political uncertainty, the euro could wobble and stall, sort of more cautious and data dependent. And this time it's hard to see Draghi dragging down the euro. He has to be really, really negative. He has to be seeing risks of deflation, not removing any negative clause, being very pessimistic. I don't see that happening. We might see a buy the rumor, sell the fact if he's a bit cautious, but I don't think it'll go too far. I see the tendency still as the bias, at least for me, at least what we've seen on the charts, what we're seeing in markets, is for the euro to go up and up. Okay, so that's our GDP preview. Now, our next segment is the US GDP. So, the new normal, low average or average poor growth is what we're seeing in the United States for a long time. We'll have live coverage of that and also of the ECB. And okay, so the US GDP released on Friday at 12:30 GMT. It is the first release. The United States publishes first estimate, a second estimate, and the final one. The final one is often revised years later. But anyway, the first release has the biggest impact on markets, and it tends to have the biggest factor of surprise. Okay, and this time things look a bit weird. When I say weird, I mean there's a big division between the soft and hard data. Okay, we'll see that in a moment. Will low growth trigger problems in the job market? That's another open question. So for the Federal Reserve, US economy is gaining jobs, even wages are rising, inflation is ticking a bit higher, but growth is very slow. And in many cases, employment lacks growth. So when we have slow growth for a long time, then we might see a few months down the road, 6 months, 12 months down the road, a drop in employment. So these are the big questions. So let's look at the hard data. Okay, the hard data is mediocre, to say the least. Retail sales don't look very good. Consumers are not buying that much. Core durable goods orders, a figure that best reflects investment, is unimpressive as well. Only inventories look okay, and when we have the replenishing of inventories, the next quarter we could see a depletion of them. And just look at the growth figures that we've seen in 2016. Only 1.6% growth in the United States. Growth was actually stronger in Europe than in the United States. We have the Atlanta Fed estimate for growth. It shows it under 1% annualized, 0.8 or 0.9 if I'm not mistaken. Okay, so doesn't look good at all. All right, so these are the hard figures, what we know about the US economy in Q1. On the other hand, the soft data looks much better. Soft data, we're talking about business and consumer surveys. So the ISM PMIs, those released just before the NFP, the build-up to the NFP, they look good. They show robust growth. Consumer confidence, even though it fell now in April, it still remains at sky-high levels, at decade highs. The University of Michigan's consumer confidence also looks good. And the New York Fed estimate, which relies more on soft data, which uses soft data in its model, shows growth above 2%. So who's right? If everybody's confident, the economy should look better. But the figures we have don't show it. So I believe we'll have a more tendency to the downside. Anyway, the Fed sees solid job gains, gradually rising wages. Inflation is healthy, but these figures could be lagging growth. We could see weak growth now, strong jobs now, and further down the line, employment situation catching up with growth, and growth even falling to negative numbers, to a recession. We don't know. It doesn't look like that, but it doesn't look too strong either. So let's talk about Friday. Expectations stand at 1.3%. All right. So that's an annualized level, not a quarter-over-quarter level. That means that quarterly growth is expected to be only around 0.3%. 2% or above is great news. It'll be, of course, a significant beat of expectations, and back to that new normal of 2 to 2.5%, which was not seen in 2016, but was seen beforehand. 0.5 or lower, which means quarterly growth of just 0.1, basically stall in the US economy, would be very disappointing. If it's even worse, if we have outright contraction, then forget about rate hike in June. And I would not rule out a contraction in the US economy. Again, the hard figures don't look that good, okay? And that will be a big shock to the US dollar. Okay, so that's the conclusion. What is the bias for the US dollar coming into this GDP release? I would say it's quite neutral. A lot depends on Trump's tax plan. We're seeing the dollar again stronger against commodity currencies, stronger against the yen, but weaker against the euro and the pound. So I would say it's a mixed bag, and it really depends on the figures. If we have figures as expected, we'll see the dollar in the same place, but if we'll see a beat, it's higher. So it's basically neutral. I wouldn't say there's a specific bias like with the euro. The euro is in an uptrend. Okay. And now for a preview of the next week, the first week of May, May 1st to 5th. On Monday, it's May Day. It's a holiday in many places, but not everywhere, not in the United States of America. And we do have a top-tier figure on Monday. We have the ISM manufacturing PMI. Okay, the first hint towards the non-farm payrolls. Again, the soft data. It's for April. Tuesday is a busy day when everybody gets back to work. Chinese Caixin PMI, important for Australia, important for the whole world. See, the Chinese powerhouse pushing forward. Rate decision in Australia, no changes expected. CPI was bang on expectations. UK manufacturing PMI for those trading the pound should be of interest. And we have from New Zealand both the milk auction and the jobs report, released only once per quarter in New Zealand. Wednesday, busy day, the construction PMI from the UK. More importantly, we have further GDP numbers from the Eurozone. Okay, we have some figures this week and more next week. The ADP non-farm payrolls, after a few strong months of good correlation between the ADP and the actual BLS NFP, last month was disappointment. Let's see if we have downwards revision and what the ADP tells us about the upcoming NFP. We also have another hint, the non-manufacturing PMI, and we have a Fed decision. So the Fed decision may be the most important event next week, topping the NFP. But well, I would say they're both as important. This Fed decision is not accompanied by new forecasts, a new dot plot, no press conference, and no changes expected. So every word in the decision will be closely watched to see if the Fed is getting closer to a rate hike in June, which is when we do have a press conference and new forecast. So that'll be interesting to watch. But again, not the more important Fed decision. In any case, we'll preview that on our show next week. On Thursday next week, we have the Australian trade balance for those trading the Aussie. Services PMI, the most important sector in the UK. We also have trade balance published by the United States and Canada. Became more important because of Trump's talk against Canada, the timber tariff, and also factory orders. And of course, on Friday, the big day, first Friday of the month, US non-farm payrolls, and also a Canadian jobs report. We'll preview that next week as well. Should be interesting too. Okay. So I missed here some comments by Ed. And before we wrap up the show, let's talk about that. The move up in the euro is just an ECB intervention. Fundamentals truly are very negative, but they try to patch up with comments. I'm still long-term bear and shorting fake rally. How euro will inhibit growth in Europe? Okay, so let's talk about that. Sure. Well, ECB intervention, I don't think there was a report yesterday by Reuters that pushed the euro higher, but the euro was also, I would say the euro was held back because of the French elections, because of fear that Marine Le Pen will come on top. Maybe she will meet Mélenchon of the extreme left, maybe Fillon, and then would win Fillon, the center right. So this held back the euro, and it's a real reason for the euro to rise because we have a higher chance of a pro-euro, pro-market candidate to win over. So I don't think it's a fake rally. And there are also reasons to be worried about the United States, and that's why the US dollar is falling. Anyway, yeah, there are reasons, well, of course, to be negative. There are fundamentals that are weak, I agree, but I don't think everything is that bad. Okay, so I think if we have an optimistic ECB, if Macron really wins the second round, which looks quite likely, not a sure thing, that nothing is certain, and then we have, well, GDP looking okay, I think there are reasons to see them rise. Another comment here, You hear that? I hear Canadian have descent, have much softwood. So what's the deal here? I don't know. I don't follow U.S. Canadian trade relations. There are always contentions between countries about different things. There was an issue about dairy products from Wisconsin. In Canada, timber, softwood. I just know that Trump and Trudeau had a meeting a few months ago. Everything looked rosy, and now I don't know why Trump is getting angry. I think he wants to show that he's tough on trade towards the 100 days. I'm sure there are real issues there between some farmers are angry in the United States, maybe also in Canada, but it's a bit artificial as far as I can see. And you also say, Ed, think that the gap euro will close later, close to May 7th, not sooner. Yeah, monthly pivots, ECB also run out the window. It's a reset needed. Dot plot June rate hike. Well, regarding the gap looks quite open there. We closed on Friday, euro dollar 107.24, and we haven't fallen below 108.30. So and we're currently on much higher ground. We would need the ECB to be very, very dovish and US GDP to be very strong in order for that gap to close. But more importantly, we need opinion polls to show lower chances for a Macron win. Currently, he leads the polls by 60% to 40%. I don't think we'll have that actual result, but again, you need just one more vote to win the elections. The dot plot June rate hike has risen. Yeah, I mean, markets are more optimistic about the Fed because of the French elections. Because when markets are calmer, the Fed is happier. They can raise rates without disrupting markets. If you would have expectations for Le Pen victory, we would have lower chances for a rate hike. If Le Pen surprises and wins, it'll be a huge shock, not only for the Eurozone, not only for the euro, which will probably fall below parity, but also I would say it would delay the Fed hike. Okay, so I hope I responded to your question. Sorry for not answering them beforehand. I didn't see the notification that these comments were posted. Okay, so let's now wrap up the show. Lots of slides here. Okay. So this is the wrap up for the live market open for April 26th. Many things happening in markets. The big event happened on the weekend. First round of the French presidential elections. A centrist, pro-market, pro-European Macron, young candidate, won the first round, topped the French polls. He'll meet extremist Marine Le Pen in the second round, and he's expected to win. An initial sigh of relief, the euro is higher. This is expected to move the ECB more to the optimistic side and gives another boost to the euro. And when there is no need for safe havens, the Japanese yen slips. We have a huge move on euro yen and, in general, a fall of the yen. The focus today will be on Trump's tax reform. In the meantime, and that if it's something really substantial, if markets are convinced, it should be dollar positive. We know that nothing will be approved this week. It'll only be an initial proposal. And in the meantime, Trump picks some fights with Canada. We're seeing quite a big move downwards in the Canadian dollar. Dollar CAD is at a 14-month high. Watch out also for end-of-month flows. Regarding the data, things to mention, consumer confidence in the United States has been a bit lower, but still, basically data is looking okay. Inflation figures in Australia were not good enough, were just as expected, and this didn't help the Aussie dollar. UK retail sales slumped again, showing that Brexit is beginning to bite. If we look a bit at the charts in this wrap-up, we'll see, of course, euro dollar continuing the uptrend in the channel. Very nice channel there. Higher lows, higher highs. Resistance 109.50, 110.40,
Support 109.50, 108.70, and 108.30. Very nice technical behavior. Pound dollar and consolidating the gains following the announcement of the UK elections. 129, 130 resistance, support 127.90, 127. Dollar yen, big move to the upside. Broke above 110, now facing the previous triple bottom of 111.60. Next resistance 112, 113, 114, all round numbers. Support 110, 109.50, and 108.10. Dollar CAD, as aforementioned, it reached 14-month high, now backed down 136.40, 136, 135, 40, and 134.60 are lines to watch. Aussie dollar, as we speak, is slipping under 75. Support 74.70, very tough line there, followed by 74.50 and 73.75. Resistance 75.40, 76.10, and 77. And the Kiwi dollar in this wrap-up will mention that it just slipped under 69, 68, 80, 68, 60 are lines of support, 69.50 and 70.50 resistance. Okay, and we have a very busy week. We got into details in the full show. This wrap-up, I'll mention that big event for tomorrow is the ECB rate decision. We're currently expecting the ECB to see the glass half full. This means not admitting it, but happy with the outcome in France. Optimistic about growth, something they will admit, and we'll be happy to looking at the March inflation as just a blip and seeing a more optimistic glass half full. On the other hand, if they look at reality, as Ed mentioned, well, unemployment is still very high. We still have other figures that don't look that good in the old continent, so that could be the downside, but they're expected to be more optimistic, and the trend is higher in the euro. The big event on Friday is, of course, US GDP, and there we're expecting very, very low growth. The hard data shows low growth. Retail sales, durable goods orders, factory orders, things like that. The soft data, the surveys, business and consumer surveys look more optimistic. Well, and finally, the data comes to a head and we'll have some results. Okay, so that's what we're expecting. Before we leave, more comments and questions here in the chat. So we have by Alexander, ECB rate decision clarity. What if the growth slows? Are going to have a weak dollar or a consolidation? If growth slows in the United States, I think we'll have a weak dollar, yeah. But basically, there's no bias. I have a positive bias on the euro in the ECB. I think it'll be hard for the ECB to weaken the euro this time. But regarding the US dollar, I think they can push it. I mean, it really depends on the data. If it meets expectations, it'll stand at the same place. Beat on expectations, stronger dollar. Miss on expectations, weaker dollar. Another comment here, euro direction at the ECB rate decision. Yeah, my tendency is higher, but again, the ECB, Draghi in the past has dragged down the euro. I think there's a lower chance this time, but it still can happen. And the comment here by Ed, we have Trump to announce big tax news today is tweeted. Yes, that's, well, I don't know what to expect from that because there have been so many headlines about this this tax thing. I will say, well, I can repeat some of these headlines to give you some kind of well, just some news to share, or rumors more than news. So we had talking about lowering the corporate rate, tax rate, either to 25%, 15%, 10%, imposing some kind of offshore tax. That means companies that do not repatriate their money to the United States will have to pay some kind of tax anyway. And we had talk about a border adjustment tax. That means some kind of, well, this would trigger a trade war basically. And I don't know, I think Trump moved away from that. There's another political issue
tax-related, money-related in Washington, the government shutdown. Trump wanted funding for the wall on the Mexican border in order to avert a government shutdown, but his Republican allies, or not so allies, did not support that, so it'll be just a standard bill. Having a government shutdown on the 100-day birthday would be quite devastating. Anyway, we'll have lots of political news from Trump today. That's certain. What we'll have from Trump, there was so many contradicting rumors, so I don't want to say too much about that. Okay, so that's it for today. Thank you very much for the questions and comments. I really enjoy that, and I think it's a huge contribution. Wish everybody a safe and successful day today with Trump, tomorrow with the Draghi, and Friday with the GDP. Stay tuned for live coverages with Valeria Bednarek, Mauricio Carrillo, and myself. And that's it. And see you also next week, the same time, Wednesday, 7 GMT. So that's it for today. Thank you, and bye-bye.